if I maybe paraphrase a little bit, the deregulation has been the order of the day. We've been headed down a road of more and more deregulation in our financial markets, and now there's a lot of agreement that we've missed a few things, that we've over-deregulated. And the question is, how do we re-implement conservative values in financial markets, and how do we determine what regulations are appropriate? I think, as you look at that, I think that there are a couple of important judgments that need to be made by Congress, by the people who are responsible within the administration, and when I say that, I'm talking about whoever is the new administration. The new president is going to be charged with determining how far the pendulum has swung, or how much too far that pendulum has swung, and then being involved in determining how far it goes back so that we don't miss the midpoint or miss the right point. What we really want to do here is kind of right-size the regulation so that we, on the one hand, protect the taxpayer, protect the average Americans from the kind of excesses and the kind of abuses that we're paying for today. And I'm not talking about the $700 billion we might be paying for, but just the anguish and the cost of what we're actually going through already. And also, not get so far into re-regulation or over-regulation that we stifle the economy and the innovation. That's what makes America's economy vital and makes us really the envy of the world. They won't like to admit it, but the truth is that our economy has more capacity for adjusting on the fly than any of the European economies or other economies around the world that we deal with. They're hidebound with labor practice regulations, with limitations on capital and other things that prevent them from being as flexible and as innovative as America's economy does. But I think it's clear that the pendulum has gone too far in the deregulation side, and I think there's some very specific things that we need to look at. In 2005, for instance, there was a John McCain-sponsored bill in the United States Senate that actually passed the Senate Banking Committee, where all the attention is today. And that bill, S-190, would have created a regulator over Fannie Mae and Freddie Mac that they lacked. So Freddie Mac and Fannie Mae were basically unregulated private banks that didn't have the same restrictions and the same precautions built in that normal banks have, and they were big enough and funded by the federal government enough that they were essentially able to make a market in these high-risk mortgages. If the market didn't exist, they made one. And if they couldn't buy and trade those if there weren't enough of those mortgages being created, they'd actually incentivize or encourage them by buying them in. So the problem was recognized as long ago as 2005, and had that bill actually been able to get through the United States Senate, if it hadn't been blocked by, remember at that time the Senate was very tight, sort of 51-49, or the balance between the majority and the minority was very, very slim. And so it was blocked from being passed into law, and today the problem we're facing is the result of that failure of regulation, or that failure of oversight that was started a long time ago, but ultimately the opportunity was missed in 2005 to have prevented what we're facing today. That's the kind of thing. Now Fannie Mae and Freddie Mac have become wholly owned by the United States government, so that regulation, that lesson needs to be applied when we spin off whatever the future of those two entities are. Whatever we do with that portfolio of those mortgages, we have to make sure that we don't create the same kind of monster with lack of regulation, with lack of oversight, that we don't recreate Fannie Mae and Freddie Mac in the same way. But there was once a good idea there, FHA loans, government-backed securities that allowed a lot of people to enter into home ownership. And so we don't want to throw the baby out with the bathwater and lose what makes home ownership and property ownership, which is such an important bedrock of our democracy and of our American system. We don't want that to be lost because we're concerned only about a small piece of how they get regulated. So the regulation needs to be right-sized to the challenge, and it will be. It does take more people who have those conservative principles and who understand that everything has to be paid for by somebody, and usually it's us. Ultimately, it's us. And so, you know, the idea that somehow the tech bubble of the early part of this decade, that somehow that the rules of profit, the business cycle had been eliminated, and the rules didn't apply anymore, well, we saw what happened there. The same thing happened when a lot of smart people in Washington thought they figured out a way, Wall Street, and they figured out a way to eliminate risk. And they didn't have to be worried anymore about giving loans and to people who didn't have the ability to repay them. Well, we're seeing what's happened to that. I mean, there are economic rules, there are consequences to actions, and that's the problems we're grappling with today. So there needs to be more regulation put back in the system, but we want to be careful that we don't overdo it and end up stifling the economy in the process.